Crypto is popping off yet again, and everyone thinks that getting rich is super easy, but losing it all is even easier. I'm Brett at CryptoGX, and in this video, we'll cover 7 quick lessons. How to keep your coins safe, shake off the bear market fear, spot the strongest projects, snag free airdrops, ride memes without getting burned, avoid scary leverage, and most important, lock in profits before the party ends. First up is the easiest way for new people in the crypto scene to lose money, which is by trading every single dip and spike. If you take a look at this article from Kraken, the large majority of day traders lose money. That means about 9 out of 10 or even more than that are losing on a daily basis. So instead of smashing the buy and sell button all day, buy your coins once and then chill out. This is called holding or HODLing because of a meme that existed long ago. This basically lets you ride the big wave of the crypto bull run instead of getting, tossed by these tiny little ups and downs that end up being drastic changes and impacts on your overall portfolio. The only caveat to holding is that it's only safe when you own your keys. So what does that mean? Essentially, we're talking about the safety of your crypto wallet. Last year alone, hackers took roughly $2.2 billion in crypto from exchanges and hot wallets. Hot wallets are basically the opposite of hardware wallets or cold wallets, which are stored offline. Hot wallets are online, something like a Coinbase wallet, Trust Wallet, MetaMask, Phantom. But in general, going back to the main point, if your coins sit on one of these sites or hot wallets, a hacker or somebody trying to steal your coins can grab them in seconds depending on what signatures you sign or what links you click on. Signatures you sign meaning if you have a hot wallet and you log into and connect your wallet to a particular website thinking that it's a legitimate transaction, you click confirm or sign transaction and it's actually fraudulent. That's essentially what that means. Now on the flip side, a small hardware wallet costs less than a tank of gas. One could be $50 and then basically it puts the keys or your secret phrase in your pocket and not, live on this exchange or in a hot wallet. Think of it like taking your money, let's say you're walking out on the town, you have in your pocket in New York City versus having your cash in a locked safe at home. One, you could get robbed. The other one is going to be completely safe unless obviously unless your home gets robbed, but we're skipping the analogy there. In general, the smart play is very simple. Pick the strongest coins, start with Bitcoin, send them to your own wallet, leave them alone until later in the video when we talk about when we're going to sell. This starting point already puts you ahead of a lot of new investors who don't really know what to do when it comes to starting in crypto. So while you're chilling with your new hardware wallet and all of your crypto safe on there, remember this: the bull market is not rolling back to 2022 bargain bins, basically the low prices of 2022. Bitcoin just blasted past $100,000 again, and lots of different analysts say that a test of the 109,000 mark is next. That train has left the cheap ticket station, and so you really should just stop holding your breath for a $20,000 Bitcoin flashback or even $50,000 at this point. Those bottom prices are long history in the past, and we're really starting to ramp up here, so just keep that in mind. Now, it's not just Bitcoin. Solana blew past the $19 mark in late 2023 to over $200 in 2025, almost damn near $300. That is well over a 1,000% jump. Coins that strong almost never visit their old lows. While we have come down quite significantly from, almost 300 down to 175 currently, it went even lower to about $100. Obviously, that was a bargain. If you got it down at $100, you at least have the potential to triple your value in some sort of near term. The main lesson here to think about is that when an asset is making a fresh new high, start to think about the normal pullbacks that could happen and be ready for them. Don't wait for some potential outcome that may never happen. People who stay frozen in the past sit on the sidelines the whole cycle, and the sideline money really just never earns anything. So if you're waiting for a new low, that might not be happening during this particular market cycle. And if you're, thinking that this is the all-time high, well, you might be wrong there as well. Especially if you're looking at the Solana chart. Obviously, the most recent all-time high was, 4 months ago, and we're kind of on an uptrend now. So it doesn't seem like the thing would be to, expect a downturn from here. Since prices are not going to rewind, your next job is to be choosing things that you think are going to be winners. History shows how brutal the crypto market can be. In 2023, only 7 of the 50 largest coins beat Bitcoin's return. The rest either lagged or sank. So if you're still clutching an altcoin that nobody tweets about anymore, it's probably dead weight in your portfolio. Compare that to a real winner lately like Solana. Thanks to very, very hot user demand, Solana pulled in $369 million of network revenue in just the first quarter of 2025. This is more than every other layer 1 and layer 2 coin combined. Strong coins in general attract lots of fresh money, media buzz, and top tier developers and people building on these platforms, which often drives the prices even higher. So in general, do a very quick portfolio check. Is each coin that you hold making headlines for growth? Or is it living off the old hype? Rotate out the old coins and ride into new projects that are having lots and lots of hype and lots of actual real potential. Not just people talking about it, not just virality, but actual value. So now that you've rotated into the coins that everybody actually wants, that actually has value, keep your radar on, essentially, because the bull run keeps tossing out free money all the time to anybody that's actually awake and paying attention. Now, what do I mean by this? So, for example, in 2023, the Arbitrum launch sprinkled over 1 billion ARB tokens worth about $1.5 billion across 625,000 wallets just for using its bridge. Now, you don't really need to know what any of those terms mean if you don't already. Essentially, if you owned the Arbitrum and used the network in a certain way, aka the bridge, then you got an airdrop, meaning they just dropped tokens into your wallet. Another great example is last year, ZK Sync dropped 2.62 billion ZK tokens in 10 hours, handing regular users roughly $630 million. Not each, of course, obviously spread across all of those tokens, but it was another airdrop. And this airdrop craze isn't new, but it's also not going anywhere. It's only growing. More than 80 airdrop campaigns have already launched in the first 3 months of 2025, with 1.2 million wallets grabbing at least one of these. You can see that here on this finsmeds.com article about token hunting, the wild race for 2025 crypto airdrops. So it's a big thing in the meme coin community as well. This goes into a little bit more about how airdrops work. You already get it. The main thing that they go over here is kind of how you can actually take part in an airdrop, which back in the day, it was kind of like you would sign up for random forums and then get an airdrop. This sort of thing now is kind of moving towards real engagement. So they're collecting proof of engagement tokens through different platforms like Gal.xe or Layer 3. Basically, you just have to be super in tune. You have to have your finger on the pulse when it comes to the communities of these meme coins, which obviously can be tough, but things like Twitter or X and Discord are very big for keeping in touch with these things. So once you buy a meme coin, don't just check out. Spend a few minutes each week poking around the new testnets or Layer 2 apps. Basically, look at the blockchain, bridge a tiny bit of Ethereum, vote in a decentralized automated organization, or mint a free NFT. These kind of tiny actions on particular blockchains that you may use or own coins in often qualify you for massive payouts and basically these airdrops later on. None of these have any sort of trading stress involved. It can just be a fun thing that you're involved in, especially when it's just kind of, looking at social media sites. Staying dialed in turns curiosity into extra coins. Very simple. So ride out holding your coins, but definitely respect the hype cycles and, meme AI coins and all these sort of things. And kind of being in tune and having your finger on the pulse, watching what other people say can really, really help you out with knowing what to buy, knowing when to get an airdrop and things like that. Speaking of meme coins and kind of the more AI side of things, different new technologies, while you're poking around with the kind of social media side of things, also take a look at the kind of hype waves of technology. So meme coins and AI tokens can rocket up very, very fast and then crash even faster. So in 2024, the meme coin crowd pumped the market cap of all meme coins from about $20 billion to $120 billion. This is a 5x jump from 1 year prior, which if you think about it, just investing in the entire meme coin market would be a pretty good strategy. If you think of something like investing in the S&P 500, obviously all meme coins as a whole have grown by 5x if you kind of average it out. But at the moment, there isn't a particular vehicle just like that. So you got to be very careful about which meme coins you're buying. On the Solana blockchain, the frenzy over meme coins has gotten so wild that over 1.2 million new tokens were minted in just April of 2025. And memes made up 95% of all decentralized exchange trades. Now, this is very cool if you bought very early, but just remember that, as you can see here on this Binance article, roughly 90% of meme projects die within 1 year. Now, along with meme coins, there's something that's very, very big during this particular crypto cycle with AI coming out. AI coins have lots and lots of hype too. A recent recap shows that the AI sector added $10 billion in market cap per week, with top tokens jumping 200% or more. These are fun numbers in general, but they swing both ways. So treat hype coins and virality coins altcoins like a firework. Light a small one, enjoy the show, and step back before it blows up. Your main stack of crypto will stay safe, but you'll still get a chance at a few moonshots within the hype world. Just don't overdo it and keep chasing that, because then you'll get down a rabbit hole and lose and lose and lose. If you lose a couple times, don't keep chasing. Grabbing hype coins is nothing compared to the danger of borrowing with huge leverage. Leverage means that the exchange lends you extra buying power, extra money, but one wrong move and they yank it all back. Essentially, if you have $1,000 to trade and you 5x leverage it, you're trading with $5,000 worth of value. But if it goes down $1,000 worth, then all of your money's gone. Last month, when Bitcoin slipped, a few percent, over $840 million in long positions, aka thinking that it's going to go up, vanished in a single day. Bitcoin traders alone lost $322 million. Reports showed that almost 86% of all futures bets were bullish. So most people were sure that prices would go up until the exchange liquidated their trades because the price went down. Futures trades meaning just what they think is going to happen in the future, essentially. Another dip during the same week wiped out nearly $1 billion from 320,000 traders. Beginners think 5x or 20x leverage multiplies their gains, which is true, but it also multiplies your losses. So a tiny 5 to 10% price change in the negative can erase your whole account depending on how much leverage you're using. So smart investing veterans treat leverage like hot sauce, at least if they're spice averse. They use only a little bit just to add a little bit of kick, but never just douse it over their whole meal. Until you have some real trading skill, I would say skip leverage and stick to spot trading, aka just, the dollars that you have. So now that you're steering clear of crazy leverage, let's talk about cashing out before the bull cycle ends. Glassnode is an amazing site for insight on Bitcoin and on-chain data and things like that. It's a little bit techy and there's lots of terminology, so it's a great place to learn this, but the data is so useful in tracking these trends. Bitcoin bull runs often feel endless right up until they don't. Past crashes show Bitcoin has fallen 75 to 84% from its highs in every cycle, but there's lots of data on Glassnode where you can kind of see different trends as to when these changes might happen, and you can cash out before the big change happens. We'll get into that in a second. But based on the percentage price fall of Bitcoin that I just mentioned, altcoins get hit even harder. 72 of the top 100 coins fell more than 90% during the 2022 bear market start. The trick is to essentially skim profits while the rest of the crowd is still cheering, and not after the lights go out on the big crypto bull run party. One very obvious early warning sign is when the Coinbase app rockets to the US App Store's top 10. Analysts note that has happened in December of 2017 and October of 2021, which are both days before the market peaks of the last couple cycles. So if it cracks the top spot again in the app stores, that's your cue to tighten your stop losses or start selling your crypto in general using a dollar cost average strategy, which essentially is, taking your whole amount and averaging a little bit each day, each week, each month. A simple exit plan beats no plan. So decide now to sell, let's say 20% of your stack of Bitcoin every time it jumps another 25%. Or you can set limit orders at round numbers that you would be thrilled to hit, 150, 160, 170,000. If those are your targets. That doesn't necessarily mean that Bitcoin's going to go that high this cycle by saying that. Another one is move profits to stable coins or your bank and treat that money as money that you have already won. Remember that you either take gains or the market takes them back. So essentially lock in your gains because you don't want to, leave them on the table. So what does all of this boil down to? Well, as we know, Bitcoin drops about 80% after every big run. And the last bear market saw 72 of the top 100 altcoins or just coins in general tumble over 90%. Coinbase's app even hit the #1 spot on the App Store right before the 2017 and 2021 peaks. That is a giant warning sign to cash out before the crash happens. I hope this gave you some insight as to how to prevent losses on this crypto bull run and how to really maximize your gains. If you want to get into crypto, I will leave links to Coinbase and crypto.com where you can get $50 of crypto just for signing up with those links. And if you're interested in meme coins, I'll leave a link to MoonShot where you can claim some free meme coins just by using that link as well. If you learned something new and enjoyed this video, make sure to hit that like button and subscribe if you want to stay tuned for all things crypto. Thanks so much for watching. I'll catch you in the next one.